All right, what's going on, everybody? It's been a little bit. Not really much, has been going on. I still have no positions other than silver, but in terms of any equity positions or, index, which I normally hold, I don't have any. And so let's go over a position that I'm in, which is silver. I have some calls in SLV. Nothing that significant, but silver does look good. I started this position yesterday, and I will add to this if this continues to work, or maybe holds the $30 level here, and depending on how gold looks as well. But in terms of the best looking things to go after right now would be silver, in my opinion. Gold looks good. It's just not. It's just not a perfect setup for me to go after to start a new position right here, but it still looks, fantastic. But in this sort of market, a position has to be perfect for me to go after, or a good risk to reward. And for gold, there's just not one right now. Now with silver, I mean, the price target on this is pretty decent. So yeah, I mean, we're looking at around 8% upside, and that's awesome. That would be a huge move, right around 8% on the upside. So that would be a huge move, with options, with those options contracts. Risking a couple percentage points, maybe 3 or so for 8% move. And so, and the market is still pricing in a lot of uncertainty. There's a lots of positioning around geopolitical uncertainty. I'll talk about that in a sec, but and as gold has performed so well for it's like 2 years now at this point or something. I don't even know how long it's been. So since right here. So an entire year gold has been performing so well. So you'll look for correlated assets that are farther out on the risk curve to start performing really well. So silver fits that bill. Now, in terms of geopolitical risk, let's look at this on a weekly chart. Yeah, I mean, this looks fantastic. Let's see this on a monthly chart. Yeah, uptrend, right? No crazy overblown levels. On a longer term chart, what I'm looking for, weekly, monthly charts is a clear uptrend with no extreme sort of overbought levels. And, I hate using that term overbought, but, yeah, but just any sort of extreme level. So in terms of any geopolitical risk, well, before I talk about that, in terms of any negative impact with tariffs, I think that there could be some, but nowhere near the level of fear that people have. So, for example, I saw an article that said since 2020, so since like right smack dab COVID hits, the level of short positions has never been so high. Now, I think that's certainly overblown, but regardless, the market believes that there's lots of uncertainty, geopolitical risk as well. And gold is, everybody knows, a fantastic geopolitical hedge. Gold has performed stellar for a year. So in terms of any sort of trending asset, it's gold and silver and copper. And so that's kind of a long rant as to why I still am super bullish on gold and silver. Now let's look at some of the gold miners here. So GDX gold miners is in a clear uptrend. Yeah, in a clear uptrend. Yeah, no sort of crazy levels, right? Nothing extreme or extended. Clearly into some sort of resistance here. But again, so this looks good, which is always good to see. You want to see, as gold is moving higher, gold miners also moving higher as well. Just shows a little bit more risk appetite. Also, M&A activity in gold miners has really been picking up. So, not just in the stock market, but also in the real world. Gold is performing well. So, or the industry. So now let's go over all the indexes. And like I said, I don't have any positions on. I haven't for a while. And basically, since that video that I titled "It's Getting Close to the End," I didn't have any positions. And I've been doing a lot of more shorter term trades, but so anyways, I don't have any positions on. So let's go over the best looking index. The best looking index is going to be Dow. And that is because it is, the only index that is nice above the 200-day moving average. And, is pulling back, getting back closer here to the 200-day moving average. I would not start a position here. This is not a perfect setup for me. If we're in some sort of raging bull market, then it would be a rather good setup. Just in terms of, this isn't really in an uptrend, but just for argument's sake, if we're in a really strong bull market, any sort of break above a 21-day moving average and pulling back to a 21-day moving average is fantastic, But it's different market conditions. So the stochastic still being up here is a no-go. And, I'm gonna wait for any sort of obvious trade or new uptrend to form. Until then, these are all no-goes. So let's look at United Health. And this is an absolute no-go. So this gap has been filled up here. And, we're kind of more at more extended levels on stochastic. So this is absolute no-go, below the 200-day moving average. I don't know if, for argument's sake, does this look bad? I don't know. But with it being, the largest component of the Dow, and certainly has filled this gap and below the 200-day moving average, doesn't give me much confidence. So then now let's go over to Microsoft. Again, I don't know. I mean, it's below the 200-day moving average. It's an absolute no go. It's kind of, up here. As a matter of fact, this would look like a really good short position. So, well, I take that back, but it's not. It's not good. I mean, this is in a downtrend. This stock is no longer in an uptrend. There's nothing to do here with this. So now let's look at Caterpillar. Same thing. Same exact thing. Below the 200-day moving average. For argument's sake, around 340. You could play this around 340 here as support. But again, I mean, the stochastic's up here around 80. This is a no-go. Now let's look at financials. Financials and Dow tend to kind of track each other. And again, I mean, so, we're sort of at kind of extended levels here. So would I start a position here in Dow? No, I would not. And sure, it could absolutely work out, but it's just game probability. So now let's move on. Let's go over to SPY. And this has lost the 200-day moving average. It's lost this entire trend of this whole bull market, right? I mean, what does this look like? This looks like a good opportunity to go short. This does not. You don't want to go long here. Let's see. Now, let's go over to Russell. And Russell is starting to fail again. Again, I mean, does this look like a good time to go long? No, it looks like a fantastic time to go short. I mean, it's completely below the 200-day moving average. The uptrend has been long since gone. Downtrend has formed. This is starting to roll over. So, let's go over to NASDAQ, and then we'll hit MAG 7. So same thing with NASDAQ. I mean, you can't, since this bull market, this trend line has been lost. It's been rejected off the 200-day moving average here. Why fight this? There's nothing to gain from fighting this. We're in a downtrend. This bull market is possibly over. I mean, if this starts sort of another leg down here, because this 200-day moving average hasn't completely rolled over, so I'm not going to say, like, hey, 100% that this bull market is over, but it's looking like it will be, So yeah, I mean, I'm not surprised by any of this action today or anything like that. Now, short term, all this can be all sorts of funky as the end of a bull market into a bear market. The price action is always really, really funky, and vice versa. From a bear market going into a bull market, the price action can always be really funky. So until a new trend really gets formed, it's always best to kind of do absolutely nothing. And I mean, if anything, look for short positions. So, all right, so there's that. Now let's go over to MAG 7. So we'll just start off with Microsoft since I touched on that one before. Now Microsoft is continuing to cancel their data center build outs, or contracts. So, that tells you that the demand is not there, right? And uptrend has been lost. Look at this gap from 440 down to, it's gapped down and just gone straight down ever since. I mean, this was like an 8% gap. you know. So I mean, this is nasty. It's done. This is completely done. Um, and again, I hate to speak in absolutes, but you know, but in terms of percentage wise, you can't really make an argument that is anything less than a 70% that this bull run in Microsoft is over. You know, you just it's breaking down, and that's just that. And now let's go over to other ones. So we'll look at Nvidia, look at some semis, down 6% today. I mean, you guys, I mean, what? This is why you never go after anything below the 200-day moving average. You just don't. This is crazy. This is an absolute no-go. This looks horrible. Look at this on the weekly. It is completely failing. This is 100% no-go. Monthly, yeah, I mean, it's rolling over. I don't know what else you're supposed to say. Now, is this guaranteed that it's going to be over? No, but, you know. So, NVIDIA, since we're on this topic, let's look at semiconductor ETF. Yeah, this is horrible. This is horrible. This is below the 200-day moving average. These are no-go. Let's look at Taiwan Semiconductor. Yeah, just completely rejected off the 200-day moving average. I'm going to be like a broken record. But this is why I have no positions. These are all below the 200-day moving average. These are no-go. Intraday or any sort of short-term or one day, 2 days, you know, sure, you gotta make money, you know, somehow. But in terms of any sort of directional swing trade, no. Let's look at AMD. Now, all right, Google, and yeah, and this is a complete and total no-go. Wow. Apple. Jeez. Yeah, no go. I mean, if this bull market is in fact over and we'll enter a bear market, this gap down here will get filled. You know. So that's why hope is not a strategy with stocks. You know, you don't want to hope that this thing's going to come back, right? You know, you got to get out while you can't. Apple. Let's look at Meta. These are all no-goes. You know, I mean, Meta looks the best out of Mag 7. Let's see how Netflix is looking. I guess you could argue Netflix looks, you know, good too, but again, I mean, this is, you know, I don't know. If I had to, like, gun to my head, you know, it's in the Mag 7, it would have to be Meta or Netflix, but I'm not gonna go after any of these, so that opinion is completely meaningless. Let's look at Broadcom. Broadcom had a horrible day. Completely just blasted straight through the 200-day moving average. Yeah, like what is anybody going after? Yeah, I mean, this is like, what in the heck is there to go after? Okay, what other large cap stocks? Amazon. Amazon has reclaimed the 200-day moving average broke out above this downtrending line. But again, with indexes below the 200-day moving average, NASDAQ below the 200-day moving average, SPY below the 200-day moving average, what the heck are you doing going long, for any sort of like meaningful move, again, a day, intraday, 2 days, 3 days, 4 days, sure, but, all right. So, I mean, that's it with equities. Let's see if there's anything crazy going on. Oh, let's look at Tesla. Now, in terms of, just my opinion on if somebody asked me like what is the most overdone with this market correction, I think it would be Tesla. But again, rules are rules, and just because I think that this is the most overdone and did catch that move from 238 to 250, doesn't mean that I'm gonna violate a buy rule in here just based on feelings. However, this is something to keep an eye on. But this is below the 200-day moving average. If you would have went long around 250 or break above 250, then then you would look for the 200-day moving average to have gotten out. But so this is why I had a price target of 250, because I figured 250 would start to become resistance, and it did. And so then therefore any break above 250, it would break above resistance and go to the next kind of logical point, which would have been the 200-day moving average. But it's been rejected off the 200-day moving average. Pretty heavy volume actually as well. But, so rules are rules for me. This is a no-go. Let's see here. So now let's go over some indexes, and I think energy is performing pretty well-ish. Yeah, you would have a $95 price target on this one. I would not start a position here, that is for sure. So, no. But, wow, in terms of any sort of range trade, energy would be one to look for. Yeah, maybe look to get back in around 90. Okay, let's look at oil. Yeah, it's sort of trending down, and this is actually a pretty decent time to go short oil. That could be a pretty good play. Oh, totally. What the heck is my pencil? There's a pen. A short oil. Okay. And then let's continue on here. So real estate, and then we'll look at bonds here. I don't know. There's no signal there, no edge to trade from. So let's look at bonds while we're at it. And yeah, they're breaking down. Interesting. Whoa, really breaking down. Okay, now let's look at commercial real estate and or regional banking. And wow. And I saw something where the Fed said that they aren't going to start selling their mortgage-backed securities. And I get the feeling that is because if they do, the entire real estate market could collapse. That's what they're fearful of. And again, that's just kind of a feeling. But it is interesting where they're doing this balance sheet runoff, and they've chose not to sell mortgage-backed securities. So that shows you that they are concerned about the effect it will have if they do sell them. So, man, shoot, look at this. Regional banking also looks like a great opportunity to get short. Yeah. Regional banking. Jeez, and with financials at a pretty elevated level. Yeah. Yep. Okay. What other? Wow. Biotech breaking down. Healthcare sort of breaking down. Industrials trying to break down, Looks like materials sort of hanging on. Okay, now let's go over to China. If you want to go long equities, China is the best looking of all of them. But I have a little hesitant on going long any sort of equities with U.S. markets rolling over. But the best looking market is China. All right, let's look at Japan. This is rolling over. Oh, yeah, this looks horrible. Oh, you guys, I don't understand how anyone can be long anything. It's just not a good idea. I don't, and I'm super optimistic. I hate being short. It doesn't ever feel good for me personally to make money when I'm short. I just don't, it's not it's something I never try and look for. So just kind of generally speaking, I'm always more looking for an opportunity to go long. And how could I go long? Always. So, I'm not any sort of bear, that's for sure. And quite the contrary. But I don't know. So, okay, so that's all that. Let's go over to Bitcoin and how Bitcoin looks. And it looks okay. It looks okay. On the weekly chart, it certainly looks less okay. If this holds right here, this could be pretty cool. But with risk assets sort of rolling over, I don't necessarily think Bitcoin would perform well. This doesn't meet all my criteria to start a new position here, so I'm not going to force anything. I just, why force anything? This looks okay. Doesn't look as terrible as I thought. But, yeah, just why would you force anything? So now let's go over, might as well look at Ethereum too while we're at it. It's horrible. Many years ago, I thought, well, how the heck is anyone even in Ethereum anyways? So I still have the same opinion, but probably even stronger. I don't know why somebody would hold Ethereum. That's done research. I put it that way. It's done sufficient research into cryptocurrency and into Bitcoin and into Ethereum, you can't make an argument for holding Ethereum over Bitcoin with any sort of real research that's done, right? Because any reason you would want to hold Bitcoin, Ethereum has none of those reasons. So all right, now let's look at some Bitcoin miners. So I'm getting distracted. Yeah, I don't know. I mean, these are all no-goes. And, it's also kind of concerning. How come Bitcoin miners have really, really done nothing? And as a matter of fact, are going down from already being, relatively speaking, really close to the lows of the previous bear market. It's got to be concerning. There's no other way to put it. I mean, it's not bullish, right? And same thing with, wow, I mean, see, HUT looks terrible. This was the previous market leader, for what it's worth. It's now terrible, looks terrible. And I think I've said this multiple times, but Bitcoin this cycle, since the halving, has performed worse than any other cycle. So, that's not a bullish thing. I see a lot of people arguing for how that is bullish because it would, you would think it would catch up, but nowhere in life is underperformance ever a good thing. And the same thing is true with equities. So yeah. Okay, Mara, let's look at Marathon. If you just sort of look at it like this, you could see some sort of bottoming pattern. But again, it's in a downtrend. It's sort of trying to bottom here, but shoot, what are you gonna do? You want to hold this to 15? Okay, I'm cool with that. Yeah, from here to 15, sure. Risk to reward is fantastic if you want to play it that way. Anything below 13, you get out, right? So you're risking $1 for a couple dollars. Somewhere around there, right? Maybe a little bit above 15. So, But again, this I'm pulling at straws here to try to come up with a trade in this department, and it just, it's not the right profession to try and force something or to try and will something on. It doesn't work that way. Now, copper looks great, although this does not look good. So, very, very short term, I guess, doesn't look good. But in terms of a good uptrending instrument to go after, it would be copper. Wait for a pullback, and then a better entry, better risk to reward, and then I'll go after copper. So speaking of those things, let's look at corn and wheat. Yeah, nothing ever really materialized. I really didn't do anything with these. Yeah, now these are rolling over. So there's really nothing going on, but other than that, it's great to do a video again. I just, there's not really much going on. I have no positions. Equities are rolling over. It was a really fun day, the last couple of trading days for, day trading. Was it yesterday when there was that gap up? When was the gap up? All right, we'll go here. Q's. Yeah, so 2 days ago was the gap up. Any sort of intraday day trading during that day wasn't that good. Nothing too crazy. But yesterday was fun. the day prior. So again, I mean, just I don't know. There's really not much to talk about. Let's look at Costco. And Costco's above the 200-day moving average. But yeah, I mean, things are just rolling over. That's all there is to it. Everything's just rolling over. Let's look at Dollar Tree. Had a spectacular day. They're selling off all their crappy stores. But is this in here? Yeah, something like this, right? So, you would expect to move back up towards this area anyways. Nothing to really get excited about, that's for sure. So anyways, you guys, I will catch you all later.